But no matter which Democratic candidate it ends up being, they'll quickly have to grapple with an economy that seems to be running out of juice, to the point that the US Federal Reserve might have to put some more in the tank in the form of lower interest rates. Well, the ANZ Bank's chief economist, Richard Yetsenga, has been looking into all of this and joins me now. Richard, many thanks for your time. Just looking at the uncertainty in the Democratic Party right now, it almost mirrors the uncertainty that's occurred in other elections we've seen this year. Now, it's quite clear that markets and economists do not like that uncertainty. They preferred the certainty, and that's partly the reason why markets went to all-time record highs last week, when it just appeared as though that Donald Trump was a shoo-in at the election in the United States.
Look, I think there's some risk here that we look at the US as a special case, and of course it has its particular quirks, but I think the commonality here is election outcomes are more uncertain, governments change more often, and because governments are more involved in the economy, that political uncertainty has bigger economic impacts. France, the UK, even now the technically minority government in India, I think are all recent examples of that. And in almost every economy, government expenditure as a share of GDP that zoomed higher during the pandemic has stayed higher. Elections now matter much more than they used to, not just for us as individuals, but for the economy at large.
But it's also true to say that Donald Trump reflects a totally different economic outlook for the United States as compared with, say, Joe Biden. Joe Biden was very much bringing more subsidies in. There's no doubt that Donald Trump, with really trying to put up more borders around America, trade borders around America, to try and bring manufacturing back onshore, represents something quite different, doesn't he?
Well, I think what you say is true, but there is a constraining factor on both of them, and that is common, and that is they both want the economy and the stock market to do well. So Trump obviously has a different tone and talks a different game, but ultimately there still will be this limiter on what he's actually likely to deliver. And I know we talk about Trump's uncertainty and Trump's volatility. We can be very confident he wants the economy to do well. He wants lots of jobs created. He wants the stock market to do well.
So there is the Inflation Reduction Act in America, which was designed deliberately to have an energy transformation and bring a lot more jobs and to subsidise business in America. Now, that goes away from the notion of free trade. Australia is trying to almost go down that same path, that there are more trade borders potentially being put up here, that we're trying to subsidise some areas, that government is starting to intervene. The question is whether that long term is good for an economy, especially a small exposed economy such as Australia.
Look, I think if we look at the world realistically, free trade now comes with risks. The risks are that the other partner can turn the trade off. And so I think a lot of economies are starting to think about and enact policies which say, where am I particularly vulnerable to potentially someone else's behaviour or a pandemic? And what can I do about that? There's no doubt that for the world as a whole, less free trade reduces wealth, reduces welfare, reduces GDP. But I don't think you can say that that means it's worse for individual economies because of that friction that now exists in the geopolitical environment.
OK, but then you could also see that if, say, for example, Donald Trump is in office and you also then have China and there is friction in that relationship, there is also friction in the Australian relationship with China because of our very strong links with the United States. This is a very difficult game for Australia to play. We've seen Australia not end up on the right side of that ledger in the past. You just wonder in the future just how that might look as well.
The geopolitical environment's more complicated, there's no doubt about that. Let's remember 2016 was Trump 1.0 and the Brexit referendum. We've been living with this different world for 8 years, and the pandemic obviously was in the middle of that, but the global economy has actually done pretty well. So I think we need to think about this more as geopolitical flux and geopolitical change rather than just talking about it as a risk, because it does present some opportunities to some sectors. You talked about the Inflation Reduction Act in the US. US manufacturing construction has nearly tripled because of that act. If you're a business or an employee in that sector, it's been quite fortuitous for you, even if it's shifted some things elsewhere.
But the one thing that is quite obvious from it all is competitiveness is key right now. Australia lacks competitiveness on wages and competitiveness on energy prices, for example. And so multinational companies now have choices to where they expend their capital. This is something that politicians and even voters have to be conscious of, because that ultimately equals wealth creation in your country and also equals the amount of taxes and jobs that you have in your country as well.
almost every economy is trying to face into the climate transition, face through defence into a more uncertain world, deliver more housing, which has been in general under-delivered by the private sector, deliver more infrastructure, cope with migration. All of these things are policy challenges. What allows us to achieve more of them is if we do a better job on productivity. Australia's not alone in needing to bring its A game to that part of the economy.
And also after having been through a period of inflation, which did come initially as a result of the war in Ukraine, the strength of Putin. So you've now...
And the biggest macro stimulus in 100 years.
And the biggest macro stimulus in 100 years. Now the opposite, it's being unwound. So suddenly interest rates, after the economies have started to slow, in some economies, interest rates are starting to come off. But Australia, it seems, is slightly out of whack with the rest of the world in that regard.
A little bit. I mean, this is a lot written about, but let's remember the Reserve Bank of Australia hasn't actually hiked, and we still haven't seen the Fed ease. We still haven't seen the Bank of England ease. It would be... We've looked at the data for the past 25 years. When the Fed and the Bank of England and the other major central banks cut, the RBA's never hiked within 3 months of that. I mean, never say never. I just think the prospect of a hike here is quite low. The next sequence of moves is going to be a couple of cuts next year.
Richard Yetsenga, great to have you on the program as always. Many thanks for your time.